Good afternoon, traders. This is Christian from Market Trade Group. End of week video. I like to always go through just a quick summary, regardless of what the price action is, which was pretty crappy for the week. But I like to go through a quick summary of what performed well, what didn't. Risk disclaimer in front of you. Everything that we're going through is for information purposes only, not giving out any advice or recommendations. Let's get to the performance for the week. S&P did finish down 1.4%. Dow down 1.8%. Oh, this should not be in green. That's a mistake. IWM almost at one point was up for the week. So maybe I was kind of thinking ahead a little bit there, or just thinking that it was going to squeak out a gain. It did not. IWM down 1%. Q's down another 1.6% for the week. I did give emerging markets a little benefit of the doubt there, just to put something in positive. Basically flat for the week. IFA, which is international developed markets, down 0.5%. TLT down just slightly for the week, was basically down earlier in the week, then came back with kind of a risk off bid or safety bid. Gold for the second week in a row. If you want to see the performance for last week, here it is. Gold was up 2.9% last week, up tax on another 1.9. One of the best looking charts I think that I see on my screen that's going up. Bitcoin down 5.9%, Ethereum down 4.6%, and both growth and value down for the week. These large cap ETF growth versus value. Gold miners finished up 6% for the week. Metals and mining up 2%. Staples squeaked out a gain. So there were some gains, not very exciting areas of the market. The semis finished exactly 0.0 for the week. Transports also were a bright spot for the week. Pot stocks down 9%. Again, very tricky, I would say, with that group. Someone tells me to look at MSOS, which I haven't changed my spreadsheet. Happy to change that, but I don't think there was much of a big difference there either. Went up, had a nice bounce, I think, like about a week ago, and then back down. Blockchain stocks down 5% for the week. Look at that, oil and gas. If that's, I guess I have to check that, but down 4.9%. I think part of that coming from one particular day. Here, let's bring this up in Bloomberg. XOP for the week. Oh yeah, look at that. So really interesting. I didn't notice. I thought that they were underperforming for the week, but I didn't realize that they were down that much. See, there's always a surprise in there. Biotech down 3.9%. Also, the XLE ETF down over 3%. Internet stocks down over 3%. A lot more, again, down over 2%. And the breadth pretty negative at that. All right, here's some international. If you were all involved in Thailand this week, congratulations, up 2.7% for the week. I thought this was interesting too. Just a couple other data points, just to look at where we are year to date. When you look at sectors, I sorted this. You can look at this column for year to date performance. Energy, again, even despite this week being down, OIH, oil services, leading the pack there in the energy ETFs. All three of those are up double digits, but OIH is up 30%. That's mainly Halliburton and Schlumberger in there. Metals and mining, also interesting, up 10%. You have a combination of just that, some steel names, also mining. Gold miners, which basically that performance coming the last couple of weeks, up 7%. When you look on the negatives, and banks, by the way, are up nicely for the year too, outperforming. I see KRE up 3.8%. And then interesting, some of these trends from last year just continuing. Specifically biotech, which performed very badly last year, down another 20% this year. The clean energy names underperforming, big spread between clean energy and old energy, or dirty energy, as I like to call it. Software is down 18% year to date. Robotics stocks down 15%. The semis are down 14%. Medical devices, which was a darling of the last couple of years, down nice correction, big correction there, down 14%. Retail down 14%. The tech ETF, larger cap tech, also down over 10%, as well as consumer discretionary. That's where we are year to date. I thought this was also very interesting. I'm borrowing the option millionaires. I just saw this at the end of the day. I thought it was interesting. Look at these names and how badly these names are hit. So what's the point of this? Why am I mentioning this? With some of these names down well over 20, 30% just year to date. We're not even through February yet. I think, you know, this is a, in order to kind of retain your buying power, retain your confidence, you know, cutting losses. This is the more disciplined that you are in this market, in my opinion, the better you are. So I'll just give you 2 quick minutes on the index charts, and then obviously I'll do much more for members this weekend, single names, and we'll talk about sectors. We'll talk about credit spreads, which are picking up a little bit, but just very briefly here. So far, the S&P has not taken out the lows from what we saw at the end of January. I don't really see a place, you know, a lot of support here. Sometimes I do like to look at the 1 hour chart to see if there's anything here. We did take out a virgin point of control, right, which arose from here, right? Notice that we did not come back. So we are now retesting those lows. You know, the low is all the way down here, but these virgin point of controls could be potentially a place for us to bounce. We have so many headlines that I don't know if that is going to take place, or if we're actually going to take out those lows. So again, I'll give you this level as support. 43.38 would be a level to see if we can hang in there, right? If that happens, you could say that this is a higher low, and maybe we could see this kind of move and then move over here. If not, the next level down is going to be 42.78, which is bottom of value for the month. And then if not, 41.77. All things that are possible. Specifically, one of the videos that I sent out this week was discussing the 2011 correction, right? You could review that, or you could review the chart from 2011. Basically, back and forth price action. I don't know if I can bring that up really quickly, if I can find it. I'm guessing it's going to be, let's see, a little bit further back, a little bit further. And I just ran out of, this should be 20 years. Yeah, maybe I'm not finding it right. It's very difficult to see. Let's see. This is, if I can't find it really quick, I'll move on. This is 2014. So, oh, maybe I have to hit the zoom out button. That's why I haven't. What is this? This is almost, we're almost there. Let me zoom out one more time. All right, and this is, I gotta go back just a little bit further. Okay, I think this is it. All right, 2000, no, it's 2016. Let's see if I can zoom in over here. We've got almost, why can't I get back there? Ugh. All right. This is still 2016. It's still not letting me go back that far. Almost. I'm back to 2012. Nope, it's not letting me go back that far. All right. So in any event, sorry about that, guys. Let me go. So that's what I think for the S&P. For Nasdaq, it's going to be a different picture. Sorry, when you do these videos live, sometimes that's what happens. Nasdaq looks weaker, right? We've broken the value area. We are going back, and we're basically at those lows from earlier in the year. There isn't, I don't think, a virgin point of control that's going to save us over here. So what I would watch here is, if this breaks, then you got to watch for things like 13,504. Not a great place to kind of be below value. And then the Russell, which I'll actually bring up IWM. That's IWN is Nancy. IWM is looking like it might break this wedge that I know everybody is talking about, right? You've got this move up here kind of weak, and we're starting to move down. So it remains to be seen. We've got a 3-day weekend in front of us. Do I know how this is going to play out? No. So, you know, I'm heavy into cash, right? It's all about conviction. Do I have conviction here? No, I don't. And I think the way that this price action is, it's very difficult to make heads or tails about this. I would say as well that sentiment is getting there, but not is where I think it needs to be. If you look at things like the BOFA Bull and Bear Index, which I could kind of show you in here, this as of yesterday was a 4.2. It is not flashing a buy signal. I don't think a lot of the other indicators, sentiment, other than a couple of the surveys, which are showing some really bearish readings. So I think if you're patient here, and that's the name of the game, if you're patient here, you may get some good buying opportunities, right? The other thing that I've stressed this week is how long some of these deeper corrections last. Sometimes 3 to 4 months. Sometimes they're actually a little bit longer than that. So we're about, we're a little bit over a month and a half. Be patient, right? And if you could stay fresh in this market, have a decent cash balance, you might find some exceptional buying opportunities, right? But paper losses, not paper losses, skin, what's the term, very thin losses, paper cut losses, that's kind of what I'm dealing with here and there with this market, but I'm not taking on any more big losses in this market. I experienced that a bit in January. I'm not experiencing that again, keeping heavy cash so this market kind of straightens itself out, and we're seeing some better things. Semiconductors, something to watch, I think. But I'll talk more about that in the weekend video. All right, guys, have a great weekend, and I'll see you on Tuesday, sorry.